the Financial Survival Network. Now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, the markets are going crazy. We're seeing a bit of a crash or pullback in commodities. Is that going to continue? What about the Dow and gold? Let's talk with our good friend, Charles Nenner. You'll find him at charlesnenner, Nenner.com. Charles, it's always great to have you on the show. What are we to make of these markets here? We're looking at the chart for the Dow Jones Industrial, starting at 11/19/21 to the close of yesterday. Well, what is the chart telling us?
Well, the chart's telling us a part of our work. For people who didn't hear me before, the theory is things don't happen at random, and you can calculate if there's a move, how high or how low it goes, and when it happens. So today we'll start explaining how we know when things happen.
Right.
This is a chart of the major cycles of the Dow Jones. 1, 2, 3. The last time you saw them in sync, that means it's the all topping and turning down, was here on the left side in 2007. That's where it went to zero stocks. Here you see this line is projected here. So the cycle topped on 11/19 last year. So that is the middle of November last year. Mm-hmm. Now the question is, how does it happen? Well, these cycles project psychology in the market, which means is when the cycles turn down, anything that can go is being interpreted in a negative way.
Okay.
So we never have to watch the news because the news is not important. I go back over here. This situation in 2007 was the same as it was over here, the end of 21. So we wrote at least you get the same situation as in 28. And I think most of stocks are already in a bear market and the indices are like a NASDAQ, FANG are down 50, 60%. Same situation. So when can you get a bounce? Well, you can only get a bounce when cycles bottom. Now, if all cycles are in sync, it's easy. But when some are up and some are down, it's not so easy. And then we have to do some extra work. So if you would have gone out of zero stocks over here just because the cycle topped and you had no idea because things still look good in November last year, right? Then you would have not lost any money or you've gotten short. Now I have another chart, the bond chart, that's even more clear to explain how cycles work. Look at this. We went out on top over here when the cycle topped. There's one cycle, take a look here. Go back the top here, and you can do whatever you want, but it only bottoms when the cycle bottoms. And listen day and night to media and television, or you can just look at the cycle, and then it's very interesting to see why later they say the bonds are selling off. If investors know something better, I haven't seen it yet. This is how most big firms and hedge funds follow us. And they write up a story because investors that are in hedge funds want to know why something happens, but most of the time they also don't know when something happens. So you see here the top in the 10-year was in October 2020. And we went to zero bonds, and I think the bonds are down huge. This is not updated. This is just to show what we sent out at the time, that we said, look at the cycle, it's time to get out. And don't try to play the bounces because the cycle is down. Very simple. Let's take a look at the next chart because that's a gold chart and people are still waiting for the bull market in gold to continue. Now this is a monthly chart, as you see right on the bottom here. It says monthly on the right bottom. And the question is, why is gold not going up? Because there is inflation. Well, this is very simple. This last cycle top was April, and the one before was here. So we got these two tops, and the monthly cycle simple is down. So it doesn't mean that there's a reason or no reason. What you will see is when the cycle bottoms, probably in a couple of weeks, then there will be a reason why gold goes up. Probably no other reason than there is now, but simply you have to wait for the cycle. So to pretend you understand why a gold price goes up or down and say it goes up in inflation, well, this proves it doesn't go up in inflation, it goes down in inflation. Why? Because the cycle is down. It's as simple as that, and you cannot more of it, and the rest is just noise. So let's go to the next chart, which is an interesting chart. So this is an example of how
right
stocks. Now this is very interesting. You see here the top on the cycle top of Disney, right? And I think Disney came down from almost $100, and the low is projected here. We see it again on the left side. It's like the end of September of this year. What is going to happen the end of September of this year? I don't know. The stories with the woke and why Disney came down.
Yeah, go woke, go broke, right?
Or the virus has there. Yeah, but let's see, you're an investor. So what you do is you get out over here. That's the top. You could go in over here and have this whole ride until the cycle here tops, and then you sell and you wait till you hear again. I just want to make the point that you don't know what's going to happen when Disney is almost $200. You have no idea why it comes down $100 at that moment. Just the cycle is down and the news will follow. So that's how we invest, and we're almost never surprised because we just go in the direction of the cycle. If you have some older people who remember Marty Zweig always used to say, don't go against the Fed. And we say don't go against the cycles, because the cycles will always help you. Because if you would have gone short here and you see this little bounce, right, you would have been safe because the cycle is down, so you don't have to worry about it.
Okay.
So let's take a look at the next one. Now this is even more interesting. This is Novatech. Most people are not following it. We have some clients in Russia, so we followed it. And the interesting thing is the cycle topped here.
Here and there.
And there was a crash before Putin attacked Ukraine, really. So it's very interesting. If you would have been in the White House and you would have said, is he going to attack? I would say yes, because the cycle shows that this thing has to crash over here. And if you would ask me, when is he going to attack? We also know when he's going to attack, because we know when the cycle tops and we know when the cycle bottoms. So that means is if you look at this cycle, this is a difficult one because the stock is not being traded anymore. But now it's going sideways for a while. So that means actually, I guess there's a status quo in the war between Ukraine and Russia. But nothing's going to happen until the cycle bottoms again. And that's going to be here. What is this? In 2024. So you can geopolitical situations, you can also predict looking at what happens to the cycle.
So 2024, potentially, maybe the war will be over then. I'm not handicapping that one. I guess you never know, but the cycle seems to imply that, huh?
Right.
Okay. What we don't have a chart for commodities, but I assume
I think I have one for cotton, no?
Oh, we did have cotton, but hold on. Let me see if I can find it here, and I will. There it is. All right, give me 1 second, and I will insert a blank page there. Sorry for the technical stuff, but we will get to it. And so cotton's a good analog for
For commodities, and I
right.
just chose cotton. We do forecast for soya beans, corn, wheat, whatever. I just want to show you this chart, which works the same way. Here we got the cotton price, and here we got the cycle. So we gave a top over here, this one. And I do this because the crazy situation is, and I don't really have an explanation, that it works perfectly with commodities. Well, you would say, how does my computer know what the weather is for cotton? How does my computer know what the weather is for sugar, etc., etc.? So we don't even deal with weather. The weather always comes later. So then now you see here the daily cycle is up a little bit now. So we see a bounce in cotton. And you know, if you follow that, I don't follow the papers, but maybe then in a week or so they explain why cotton is going up a little bit. What we would say commodities that are dealing with the weather. Now you ask me about commodities in general. I sent out today, and I spoke about work I did on the CPI and on the Goldman Sachs commodity index. And I showed them that in a couple of weeks, inflation is going to come down. It's not over. It's going to come down for a couple of months. And I told the subscribers, but it doesn't show up immediately in the numbers that the government gives you, because they're always behind. So
looking behind
some bad numbers the next couple of weeks. Yes, but you should know that the worst part of inflation until the end of the year is over. So that's important for investors to know what that situation is. So
assume that the worst is over, but the inflationary cycle could go on for
if they go to
many years, right? Yeah. So inflation, the worst is behind us.
Many years, but you know.
Yeah. It's not a straight line.
Go up and down.
Right.
Short term until the end of the year.
Right. Okay, that's interesting. So if
they want to see it,
yeah,
you go to charlesnenner.com,
and we've got a link to it in the show notes to this interview on Financial Survival Network. Hey, Charles, so gold looks like it's kind of going to go sideways, right? Let's go back to gold.
Well, still lower and still lower. You just have to wait till the monthly cycle bottoms, and then you have a very nice entry for resumption of the bull market. But till now, every time you buy, you get losses, because the monthly cycle, which is one of the longest cycles we have, is simply down, and you can't force it.
Right. Yeah. You're going to be betting against the cycle, and that's
now, if you go back. Yeah. If you go back here, you see this was a good top. This was a perfect top. It's very easy to invest. This is long-term investing. It's a monthly cycle. As you know, we also have some intraday updates during the day for short-term traders.
Yeah. Interesting.
But if you really want to take positions in these things, go wrong side of the market.
Gotcha. Understand. And the charts are very clear on this, and they go back, you're going back here to 2002, and they pretty much followed what we've got here. You've in the past said Dow 5,000. You still think that's a possibility? Let's go back to the Dow chart.
Yeah.
Yeah. So not quite time to break out the champagne, but that could happen over
probably not years. Until this cycle, not until the cycle low.
Right.
Yeah, because the problem is that most investors these days don't remember real bear markets. But if you look what happened in 1929, in the 70s, in 2007-8. In a couple of weeks, we're going to have a bounce, and then everybody will say, oh, the bear market is over. It's just trying to get you in so the insiders can sell more. It's not over, but have a playable bounce, and we already made up a list of stocks that we're going to play. We bought a couple of weeks ago General Motors. and we're looking to add 3, 4, 5 more stocks once the cycle bottom. But it's only a bounce, but it could be a bounce of 20%, 25% until the bear market continues. So you really have to know what you're doing over here and what cycles look like.
Okay. Yeah. So when we're looking at interest rates, which we don't have the chart for, same deal there, huh?
Same deal. So for people who are in bond market, they shouldn't be. They lost a lot of money. So that's why it's important to know that inflation is stopping short term. And if you watch our research, we tell you when the cycle low is and when you have to go long.
Okay. All right. So you can get your free trial. Just go over to charlesnenner.com. Charles, you and I have been talking for the better part of 10 years now. And the cycles are the cycles no matter what. Following the news is a sure way to lose money, isn't it?
Well, that's why I thought this cycle, it goes down, it goes back 50 years. If you know the amount of weeks between
right
this top, and this top is exactly the prediction of what's going on becomes negative over here, negative over there, negative over there. And it doesn't matter if you know what the facts are. You just have to know that the market doesn't like it and that the bonds are coming down.
Okay. Hey, what about Bitcoin? We don't have a chart for that. It looks like it's getting a bit of a bounce now. Right?
Yeah, we long Bitcoin a little bit more of a bounce. 4 times a day, 4 times a week, we update Bitcoin also intraday because they're very volatile movements. And Bitcoin and Ethereum are one of the easiest markets to follow because in this situation where you look at the bond cycle, I say there is news and it depends on the interpretation of the news. But on the cryptocurrencies, there is no news. So it doesn't give us any noise. It doesn't bother only the cycle.
Right. And so we're ready for a bit of a bounce on Bitcoin. How much higher you think it can go?
I haven't calculated, and then we get if we go through that, we get a higher upside price target, which I expect because the daily cycles on Ethereum and on Bitcoin are up for a couple of weeks.
Couple of weeks, huh? Interesting. Well, I know when in my past, from my own investing, when I've gone against the cycle, regardless how good the news is, the fundamentals, everything, invariably I've lost money. So I'm a believer the cycle people are generally ahead of the fundamental people. When you do see fundamentals correspond with the cycle, then you can really see huge increases, right?
Yeah, but then you're already too late. When the news comes out, you know what they say is sell on the rumor and buy on the news. So you have to accept that this works until it doesn't work anymore. So if this cycle works for the last 50 years, just take advantage. People ask me, what if it doesn't work anymore? I says, well, till now it always works on everything we do. Just don't try to understand why it's going to happen. Because if you see how long it took from the top until we really knew where the inflation came, that was a long time because this cycle topped in October 2020 and everything looked great. So you don't know. Maybe there are insiders who know a lot. That's why it works. I'm not totally sure, but it's not important. The main thing is that you know what's going to happen and when it happens.
Exactly. And that's a good thing. So in any event, go over to Charles's site, charlesnenner.com. We're subscribers and get a free trial for 30 days. See if it works for you.
Yeah.
And Charles, we appreciate, as always, you're coming on. If you got a question for Charles, shoot us an email, kl@kerrylutz.com. Make sure you take your free newsletter at financialsurvivalnetwork.com. Charles, we'll touch base with you in a month or two, see how all of this has panned out.
No, a lot's going to happen. We'll talk again in a month or two.